Hey, if you're self-employed or run a small business, I've got a really important question for you. Are you sure your business is actually making money? We're about to pull back the curtain on one of the biggest, most common mistakes that entrepreneurs make, a mistake that could be hiding the true health of your company. Let's get into it.
It's a scary question, I know, but we have to ask it. Because of one simple error in thinking, your business could be on much shakier ground than you think, even if the numbers on your tax return look pretty good.
And here it is. This is the heart of the problem. So many small business owners, especially if you're a one-person show, look at the pile of money left over at the end of the year and call it profit. But it's not. It's a myth, and it's so common that even our tax laws kind of nudge us into thinking this way.
To make this super clear, let's walk through a little story. I want you to meet Sally. She's a freelance writer, and her situation is a perfect, real-world example of what we're talking about. So last year, Sally crushed it. She brought in a grand total of $75,000 from all her writing gigs. That's a pretty solid number, right? That's her total income, the starting point for everything.
Now, Sally's smart. Like any good business owner, she keeps track of all her expenses so she can deduct them. You know, the usual stuff like travel, her home office, supplies. As you can see, it all adds up to just over 10 grand for the year.
Okay, so she has her income, she has her expenses. The next logical step, the one pretty much everyone takes, is to figure out the profit. But this is exactly where the illusion starts to creep in. So Sally does what you'd expect. She takes her income, subtracts her expenses, and lands at a number that she thinks is her profit for the year.
And there it is, $64,608. Sally looks at this and thinks, hey, not bad. I had a really profitable year. And honestly, looking at it this way, you can't blame her for thinking that. But here's the twist, and it's a big one. That number, it's completely wrong. See, that $64,608 isn't profit. Not at all. It is simply the money that's available to pay the business's single most important employee, which is Sally herself. This brings us to the biggest, most critical mindset shift for any business owner. You have to pay yourself a salary. And that salary needs to be treated as a real expense, just like your rent or your internet bill. This is the absolute key to figuring out your true profit. And this just nails the problem perfectly. Think about it. If Sally hired an assistant, she would absolutely 100% deduct that assistant's salary as an expense before she even thought about profit. So why in the world wouldn't she value her own time and her own labor the exact same way? So let's put a real number on her work. If Sally were applying for a full-time writing job, she'd expect to make around $70,000 a year. That's what her skills are worth on the open market. So her own business needs to be held to that same standard. Her salary is now officially a $70,000 business expense. So we have a new, much better formula. Let's call it true profit. It's your income minus your business expenses and minus your own salary. This is the equation that tells you the truth about how your business is actually doing. Now, just look at the difference this makes when we put them side by side. The illusion was a so-called profit of over 64 grand. But the reality? Well, after we factor in her $70,000 salary as a legitimate cost of doing business, the story completely changes. Sally's business didn't make a profit, period. In fact, after paying its one and only employee what she deserves, the business actually lost over $5,000. It is not in the black. It is deep in the red. This is the reality check so many of us need. Now, I know what you're probably thinking. Hold on. How can the business pay a salary it doesn't have? How do I pay myself more money than the business even made? This sounds a little weird, I know, but it just requires a small but really powerful mental shift. And yeah, this is the first thing people say. But it's all my money. It just moves from my business account to my personal account. What's the big deal? And it's a fair question. It feels like moving money from your left pocket to your right pocket. But separating these roles is the only way to get real financial clarity. Here's how to think about it. You have to wear two different hats. There's worker you, that's the person actually doing the work, the writing, the designing, whatever it is. And worker you deserves a fair salary. Then there's owner you. That's the investor, the one who risked their capital to start this whole thing. And if the business can't afford to pay its worker, well, it's the owner's job to step in and lend the business the money. So how does that actually work? It's simple. First, owner you sees that the business is short on cash to make payroll. So owner you makes a formal loan to the business to cover that shortfall. Then the business uses that loan to pay worker you their full salary. And now, most importantly, the accounting is honest. The books show a real loss for the year and a debt that's owed back to the owner.
And hey, here's a pro tip to take it one step further. Owner you is taking a financial risk by lending that money, right? To reflect that, you should actually charge the business a reasonable interest rate on that loan. This isn't just a mental trick, it keeps your finances clean, professional, and accurate.
Okay, so let's recap the big stuff here. Number 1, your salary is an expense, not the profit. Say it again, it's an expense. Number 2, always use that true profit formula to get an honest look at your business. And finally, number 3, start thinking of yourself as 2 separate roles, the owner who invests and the worker who earns. It will change your perspective completely.
Once you make this one change, you stop seeing an illusion and you start seeing reality. And that reality is the information you need to make smart decisions, to raise your prices, to cut costs, or to find new customers. So I'm asking you to go take a fresh look at your own numbers. What is your business really telling you?